the conference over to Mr. Ankur Periwal. Thank you, and over to you, sir.
Hi. Good afternoon, friends, and welcome to Laxmi Organic Industries Q4 and FY21 earnings call, the first earnings call for the company. The call will be initiated with a brief management discussion on the earnings performance for the quarter and for the full year, followed by an interactive Q&A session. The management team here are represented by Mr. Ravi Goenka, Chairman and Managing Director, Mr. Satej Nabar, Executive Director and Chief Executive Officer, Mr. Harsh Vardhan Goenka, Executive Director, Business Development and Strategy, and Mr. Partha Roy Chaudhary, Chief Financial Officer. Over to you, Mr. Ravi, for the initial remarks.
Dear shareholders, good evening, and a very warm welcome to all of you to the maiden earnings call of your company, Laxmi Organic Industries Limited. As Ankur mentioned, on this call, I am accompanied by Satej, Partha, and Harsh. Although we may have had some fruitful discussions during the pre-IPO roadshows, this is our very first interaction after the successful listing of Laxmi. We are overwhelmed by the trust the investing community has placed in us, and this makes us even more responsible to create value for the shareholders and live up to their expectations. As the proverbial saying goes, we are the new kid on the block, and in the capital markets arena, we will take each step as an opportunity to learn while we share our experiences and views with you. Slowly but surely, we will get used to the subtle and the technical nuances of a wider accountability and trusteeship matrix. To say the least, it has been an unusual year. From the gloom and doom when our Honorable Prime Minister announced the national lockdown on last March 23rd, to the boom specifically the chemical sector in particular has seen in the last financial year. From disruptions in production and supply chain to the high traction in demand of the pharma and agrochemical markets, it has been quite a year. I can confidently say that it was only due to a committed and capable team that we could have achieved a near 100% production and sales volume. I truly believe that the true heroes of our company are our workforce at the factory sites. They have worked tirelessly and fearlessly in spite of all odds. Many kudos to them. Let me now shift gears to our financial performance. Our company has returned very healthy results, both on account of the market dynamics and the value growth in our specialty intermediates business, despite the continuing challenges of the pandemic. On our standalone results, year-on-year, the revenue grew by 18% to 1,616 crores, and the EBITDA grew by a handsome 69% to 212 crores. On a quarter-on-quarter basis, the revenue grew by 37% to 471 crores and an EBITDA of 59 crores. EBITDA margins year-on-year moved from 9% to 13%, and quarter-on-quarter it moved from 8% to 13%. Year-on-year, our profit after tax grew by 56% to 123 crores on a standalone basis, and our EPS grew to rupees 5.4 from rupees 3.21 per share of a face value of rupees 2 each. On the cash flow and capex, standalone cash flow from operations, which is the profit after tax plus depreciation for the year, has been a healthy 168 crores. The total capex spent by the company during the year is of the order of 88 crores. The projects in both the SI and the AI are progressing well, and we are hopeful of capitalizing some of them during the current financial year. Although there has been some slowdown in the recent months due to the uncertainties and restrictions around the current resurgence and escalations of the pandemic. Let me come to the consolidated results. Year on year, our revenues grew by 15% to 1,773 crores, and the EBITDA grew by a handsome 87% to 221 crores. On a quarter-on-quarter basis, the revenue grew by 34% to 521 crores, and the EBITDA grew by 211% to 65 crores. EBITDA margins year-on-year moved from 8% to 13%, and quarter-on-quarter it moved from 5% to 13%. This has been a year during which both the company and its subsidiaries returned strong top and bottom lines. Year-on-year, the profit after tax grew by 81% to 127 crores, and our EPS grew to rupees 5.59 from rupees 2.86 per share of rupees 2 each. We now have a much stronger balance sheet than ever before, with a near zero debt, giving us a solid foundation for future growth. Today, we can see some light at the end of the pandemic tunnel. The cases have plateaued and the vaccination drive is catching pace. Assuming that this trend will continue, we expect a strong recovery in the macroeconomic activities than we previously assumed. It is my belief that the chemical sector will witness a huge capex cycle over the next decade, and I can assure you that Laxmi will play a significant role in this space. Our capex for the current year are progressing fairly well, and in spite of the pandemic restrictions in Europe and in India, we hope that these investments will realize significant benefits during the next financial year. In a nutshell, we have had a good year despite the challenges. Today, we have a robust business plan for the current financial year, and I am confident that our teams will achieve and deliver results that are expected of them. I will now open the house for questions and answers. Me and my colleagues will be happy to take them. But last and not the least, I take this opportunity to wish you and your families a safe, healthy, and a prosperous year ahead. God bless. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 1 again. And participants are kindly requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question comes from Madhav Math from Fidelity Investment. Please go ahead.
Hi, good evening. Thank you so much for your time. And congratulations on very strong numbers. I just wanted to understand a very basic question. Our margins have moved up quite a bit in fiscal 21 versus fiscal 20. I just wanted to understand the reason for the increase in the EBITDA margins. And if you could also help us understand if the margins have increases come from the acetyl intermediates or specialty or both, and if you could just sort of break it down in terms of which one is sort of helped margin increase. Thank you.
Harsh, you would go in or I'll go in?
Partha, go ahead.
So, Madhav, there has been an improvement in the margins, but the character of the margin improvement in both the verticals are different. While in the acetyls, the margins grew on value terms, in the specialty intermediates business, the margins, the absolute margins, grew on 3 counts. 1 is volumetric growth, 2, change in the product mix, and 3, the pricing benefit that we have been able to achieve through the years, FY20. Yeah?
Okay. And the acetyl side I didn't understand. Sorry, value terms means what exactly?
The acetiles in value terms means it is not that we had any volumetric growth in acetiles, whereas we had volumetric growth in the specialty intermediates.
So in acetyl, you think I'm just implying basically the pricing sort of helped the margin improvement basically. That's what you're saying.
Yes, that is the inherent nature of the business.
Okay.
Yeah?
All right. And just one other follow-up. I frankly do not understand it very well, but right now, a lot of commodities are sort of benefiting from an improvement. In our margin improvement, is there any element of sort of margin for some of our products being at high levels which can correct in the coming sort of 1 or 2 years, or these are sustainable margins going ahead?
No, while the margins in the acetyls intermediates could correct, but for the company as a whole, going by the trajectory that we have chosen for ourselves, which is growth in the specialty intermediate segment, and the investments which are being made in that particular vertical, for the company as a whole, the margin profile, our assessment and our objective is to keep on improving that margin profile. Yeah?
Understood. Okay, I'll come back in this. Thank you so much.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Next question comes from Rohit Nagraj from Sunidhi Securities. Please go ahead.
Thanks for the opportunity, sir. So the first question is on our Vitti acquisition. So given that the current circumstances and in terms of the logistics and COVID-related issues, so what are the timelines that we are looking at from importing all the equipment, putting it on the ground, and probably starting the initial trials and commercial production? Thank you.
So I'll take that, Harsh. So in terms of the progress on the project, the activities of dismantling, packaging, logistics, etc., at our Italian site has restarted. There's about a workforce of about 50 people on our Italian site who are working to this end. The first consignments will leave the Italian shores in the next maybe 2 weeks' time. So that is in terms of the dismantling and the logistics, etc. In terms of the site work which is going on in India at our Lote Parsuram site, today we have a workforce of more than 150 working on the site. Nearly 50% of the construction work of the infrastructure is already completed, so that they are ready to receive the equipment and there's no multiple handling of the equipment which come in. And the orders, etc., for the long delivery items have been placed. In terms of our capitalization, we are still targeting a capitalization before the end of this current financial year. We are running that schedule. In terms of our R&D, the R&D activities have already started. I wouldn't like to quantify, but some of the products have already been approved with the customers, with lab scale samples. We have sent the kilo lab samples, the kg level samples to the prospective customers, potential customers. The kilo plant is also been operational now.
Understood. Thanks for the update on that front. So the second question again on the fluoro specialty business. So here in terms of the customer segments, what kind of customers are we targeting, and how are these customers comfortable to come to us? I mean, probably they were with Vitti and now coming back to an Indian player. So what is the overall philosophy from that front? Thank you.
I will leave this for Harsh to answer, please, Rohit. Harsh.
Yeah. So actually, just before the lockdown was announced, we had some customers come and visit us from international places. So they were quite eager to. But we have to now obviously continue work virtually. In terms of our customer segments, as we mentioned earlier as well, that our strategy remains the same. The agro and the industrial blocks will become the first target customers. The pharma will follow suit since that requires a slightly longer qualification period.
Fair enough, sir. Just a concurrent question to this. In terms of the validations, generally, once we start the plant operations and we put out those initial batches, how much time does it take to stabilize the product and to get it validated from our customer? Thank you.
So, I'll generally talk about pharma and pharma separately. So the agro part, we have already piloted products from a facility in India. That gives the customer a lot more comfort. And we believe that it will be a quarter to get all products qualified as they are produced at best to then ramp up and reach full production on the agro side. The industrial side as well, we would say might be slightly longer depending on the detail of the exact product mix. That may be 3 to 4 months, but the pharma might take even longer depending on the life cycle and the documentation required as those customers need to physically visit our site.
Thank you so much and best of luck, sir.
Thank you.
Thank you, sir. Next question comes from Jignesh Kamani from GMO. Please go ahead.
Hi, Mr. Partha, and hi, sir. Good set of numbers. Just on the acetyl business, right now, commodity cycle and the industry cycle is upturning the acetyl cycle. Any idea till what time the current margin is sustainable and when you expect the margin to fall down in the acetyl business?
I will take this question, Harsh. No, Jignesh.
I was tempted, but go ahead. Yeah.
Jignesh, however much we would like to know this, it is just not possible for us to have a handle on that. But we are following the market very, very closely, closer than probably ever before. We are aware and we are quite alert to the impacts of these movements, and we shall protect our positions and continue to perform, Jignesh. Yeah.
Understood.
So I'll just add, Jignesh, our overall strategy for our Laxmi remains unchanged. The acetyl business.
Hello.
Harsh, you dropped off.
We missed you.
Are you there, Harsh?
So 1 minute, sir. Harsh's line got dropped. Let me reconnect him, sir. Participants, stay connected.
Harsh, sir.
Yeah, Harsh, sir, welcome back. Please go ahead.
Yeah. Sorry, Jignesh, I don't know, some issue there. I was saying that our strategy remains the same, Jignesh, where our acetyl business is the cash-generating business, which will continue to perform and give cash irrespective of business cycle. We're not here to predict the cycles. But what's in our control is the CapExes and our growth in our specialty business. We are on track to perform in our specialty business and in our fluorinated business by investing capital and driving existing product mix and profitability, which is clearly evident from the numbers we've posted for March 31st.
Understood. And on the specialty chemical, we were developing a couple of new products. Any timeline for that, and how is the process of approval from the customer and the volume from the new product?
Yeah. So it's a continuous cycle. As we mentioned during our last calls just before the IPO, we've already received some approvals at a pilot scale. One of the products will find a commercial impact in this financial year, one of the products will be with the following year. But products that were piloted out in the last few years will be seeing a larger amount of sales already since they are reaching maturity stage. So I would not call it an impact of one or two products. I'd say it's actually a overall cycle of product development that is resulting in our growth. This is very evident as a lot of our new products are driven towards export-oriented markets like the US and Europe. Our percentage of export share is already at 10% of our specialties, and we will see that significantly go up in the future.
Sure. And my last question on the machine, though you elaborated on the progress, is there a risk that current lockdown mentioned that the earliest plan of fourth quarter commencement might get delayed by 3 to 6 months?
So, Jignesh, I would say that if the lockdown continues and we're not able to mobilize people, I think that is the biggest risk we face. That's something not in our control. But even, for example, during the current lockdown, we have permission to operate and we have 150 people at site. We would want more people at site, but there are obvious localized restrictions and interstate movement restrictions which sometimes curtails that possibility.
Thank you, and all the best.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Next question comes from Sachin Kasera from Swan Investments. Please go ahead.
Good evening, gentlemen, and congrats for a good set of numbers. I'm new to the company, so pardon me if I'm asking some basic questions.
Sorry to interrupt, Sachin, sir. Your voice is breaking, sir. Can you please rejoin the queue, sir?
Is it better now?
Yes, sir. Please go ahead.
Yeah. My question was, are we giving any indication in terms of what type of volume growth we could see?
Sorry to interrupt again, sir. Your voice is still breaking. Please join back the queue for your question, sir. Thank you. Yes, sir. So next question comes from Siddharth Mehta from Foremost System. Please go ahead.
Yes, I had a question about the strategy that you're following. From what I understand, that you want to focus on specialty intermediates and grow in that area, possibly because they seem to be higher margins and they probably give a longer lock-in with customers. If that is correct, or either way, could you suggest what might be the growth percentage that you're seeing annually for the next 2-3 years in terms of sales, and also what you expect in percentage growth in PAT annually over the next 2-3 years?
Can I take that, Harsh, or you want to go ahead?
No, go ahead.
So the way to look at this is there are two businesses. In the acetyls intermediates, the growth would be linear. Whereas in the specialty intermediates business, the growth is linked to the capexes that we put on the ground. So therefore, there will be a sharp jump, and then it could plateau. Again, there would be a sharp jump. It will move in
with
steps.
The capex. Okay.
Yes, in a way, right? And if you look at the PAT and the growth of the company and how the network has grown over the last, say, 10 years, we would like to better that trajectory. But I repeat, we would like to better that trajectory. And as it is quite common in Indian specialty chemicals company, there would be some quarters, maybe a year of flattishness, and then you will see the realization of the investments that we put on the ground. Yeah?
I understand. So, are you also seeing any traction because of the China Plus One strategy, or is it independent of this that you're looking at the growth? And do see if you could suggest some numbers on what is the likely growth averaged over, let's say, 3 years with this flat and then a sudden jump and then flat again and then a sudden jump because of next capex. But let's say
over 3 years or so, what could we expect in sales and in profits?
So I would like Harsh to take the first part of the question, Harsh. The second part I can come in, or you can continue. Thank you.
Yeah. So, on the China Plus One strategy, I think the entire chemical industry, the spectrum industry is there to benefit, and we are no exception to that. We clearly see two kinds of opportunities. One are direct products where we can make a product like for like, and two are where our customers are also getting that benefit. So, for example, a particular API or a particular intermediate can only be made in China, where we are seeing our customers now requesting for that product as well. So the entire value chain is really shifting out to India. So both of those benefits we would definitely see a requirement of that, and we are seeing that every year increasing. Also, you can take the second one.
Yeah. So in terms of, the trajectory, if one has to look at our revenue growth, our revenue has grown by about 13 to 15% CAGR. But we have been, over the last 3 or 4 years, we have been also focusing on profitable growth. Therefore, we are trying to shift our EBITDA margin more towards, say, 15% plus as a mix, as a basket. So while we continue to focus on the top line, I think we'll focus more on the EBITDA line as well. Yeah?
Okay. So if you are suggesting that your profit, your sales will grow at roughly 15% a year CAGR, the PAT would probably grow at 20 or 25% CAGR because of the greater focus on higher margin products.
Yeah, but I wouldn't comment on that. That based on the conversation, you will have to sort of take a judgment call.
Work it out. All right. Yeah. Thank you. And I do appreciate your focus on the higher profit products. I think that's really commendable. Thank you.
Thank you, sir. Next question comes from Manoj Garg from White Oak Capital. Please go ahead.
Yeah, very good evening, and thank you very much for giving this opportunity. And congratulations for a very good set of numbers. So, Mr. Partha, this question is for you. Like you alluded in your opening remarks about growth in specialty business, both in terms of volume as well as value. So, would you be able to give that split in terms of how much growth was being driven by volume and how much with value?
It is a mix, Manoj. Okay. And there is a third element in this, which is movement, which is change in the product mix. So we have also moved in higher margin product. See, our base intermediate is diketene, and the profit margins are determined by the basket of products which is supported, or the diketene which goes into which type of products, right? So there has also been a third element, and I would not really like to give further details on that, Manoj. We would like to sort of keep that, yeah?
Sure, I appreciate it.
There are three drivers.
Yeah, got it. So it's volume, mix, as well as the value growth.
Yes. In SI.
Okay. So the second question is on the fluorinations. While you guys have indicated that you have already started, working on the pilot stage R&D as well as on the kilo labs, and with customer validation now and customer approval. But in terms of commercializing of those molecules, is it that we have to have a plant level kind of commercialization, or even like some, for some niche kind of products, even the kilo R&D labs would probably fit the bill initially till the time we will be able to commercialize the new plant in India?
Harsh, I will take this and add.
Yeah, sure.
Manoj, given the current choice of products that we have taken for ourselves, getting commercial output of some significant nature, I don't see that as a possibility. But the question that you have asked is something which we have in our minds, at the back of our heads, because we have a kilo lab. Okay. Maybe it will emerge in the next probably 1 quarter or so, whether it is possible, not possible, whatever. Yeah. We have also gotten some intermediates from Italy, whether we can process and convert them into finished, etc. So this is something which is under consideration, but I don't think we can really pin our this thing on any significant numbers, Manoj. Harsh, do you want to add something?
Well, I think the way I understand Manoj's question, it was more on can we crunch the piloting to with respect to qualification with end customers. Of course, that is an answer product by product, and it's in our mind. Some products that are not as sensitive to the end customers may be open to it, depending also on the quality thresholds they are able to reach. So it's a case-by-case basis, and that remains on our radar.
Sure. And maybe the last question from my side. And the general feedback which we have got talking to the other peers in the chemical sector is that the scaling up of fluorine chemistries has its own challenges, given this is a very notorious chemistry. While we understand that what we are getting from Italy team is obviously a 4-decade kind of an experience, and even those are the people who are likely to help us in terms of scaling up of this chemistry going forward. But in terms of our preparedness, if we can understand that, how are we thinking about this? And maybe if you can just give some colors in terms of our preparedness for the same.
Harsh?
Yeah. So Manoj, as we had said this when during our pre-IPO calls, our strategy, we're very, very cognizant of this fact that scaling up fluorine chemistry and products is challenging. So we've taken 2 approaches to secure ourselves on this. One, we have only taken on existing products which have been produced at Miteni, where the technology is absolutely sacrosanct and proven. So that will ensure that there's a limited range of failure, if at all. 2, we are redeveloping or remaking those products at a lab scale and at a pilot scale before it hits commercial. So that again ensures that the people working eventually in the plant are already comfortable with it and get comfortable with the chemicals, the reactions, the technology, etc. And third is obviously the people. So getting the Italians here is one of the current challenges we face, which I'm sure with the lockdown and with the time that will eventually open up.
Sure. Thank you very much for answering all the questions, and wish you all the best.
Thank you, Manoj.
Thank you, sir. Next question comes from Amar Maurya from Alpha Parade. Please go ahead.
Thanks a lot for the opportunity. So my first question is, in terms of the diketene or the specialty chemical, what would be the current utilization level, and by when we can see next round of CapEx, given that now the CRAMS is the area which we are targeting in a bigger way? Hello?
Sure. Yeah. So I'll take that. In terms of our specialty intermediate utilization, as you again mentioned, that it's not really about utilization. It's about product mix optimization and how do you go up the value chain. So even if we have a rated capacity of 100,000 tons, a 1,000-ton improvement can actually have a larger multiplier effect given which part of the value chain we choose to play in. So that's the way we look at the business. On your second part, second part with respect to CapEx, I think the CapEx cycle is continuous. We have more than 200 crores of CapEx, which we raised in the IPO for our specialty. So for the next 12 months, there's clearly a large runway. More CapEx is coming up is part of our story, and as products are developed, we will give those announcements and that clarity to you all in the future.
Okay. If I can extend one more related to the specialty, when we say that, sir, now we are targeting export primarily in the diketene chemistry and largely from the CRAN side, so any early success which we got into this?
Sure. So let me just clarify. We don't do CRANs. CRANs is contract research and manufacturing. Ours is more contract manufacturing. The research actually we do by ourselves for ourselves. So slightly different connotations. We've already had success, or rather we've been seeding these markets over the last few years. So it's not last quarter or last 6-month initiative. It was strategically done over time because getting access to international accounts has its own gestation period sometimes when you're at least trying to establish yourself. So it's been an effort of that. And as the products have now matured from pilot reach to a larger ton level production scale, we are seeing larger revenues come out. And you will see that in our next year or the next quarter where our numbers towards the export will continuously go up. Again, I will not say that's the only focus. The focus remains contract manufacturing, and of course the domestic market is also available for us to take. It just depends on what we choose and how we choose to operate the business depending on the optimized product mix.
Okay. And sir, in terms of the SI, I mean today the 10% is the export. Down the line, 2 years, and then in terms of the SI, barring the fluorine, what could be the export and domestic mix?
I can't give a projection of a number for obvious forward-looking reasons, but I would say that it will have significant growth due to the factors I just mentioned.
Okay. Got that. Thank you, sir.
Thank you, sir. Next question comes from Dhruv Muchal from HDFC Asset Management. Please go ahead.
Yeah, thank you so much. Small clarification. In your presentation on slide 10, you've given the capacity utilization numbers for the acetyl business. I just wanted to understand this 84% for FY21. Does it include is it at the 161 capacity, 1,000 ton capacity, or is it at 201,000 ton capacity? I mean, I believe they've acquired this YCPL. So, is this considering the growth in capacity, and after that this capacity number, or?
No, this is only for us.
This is only for 161.
Correct.
Okay, so that will come next year. Got it. And actually, my second question was a bit related to the earlier one. Is it possible to share like for example, you have given it for acetyl business, the capacity utilization number for the specialty business also? I understand a bigger part of growth is coming from product mix improvement, but just add some handy numbers for our working.
Harsh, should I take that?
Yeah, Partha.
The problem in this is we have common assets producing multiple products. In that specialty intermediates business, we have common assets producing multiple products. Okay. And so, yeah, but I shall give you some indications, which is in the DRHP, there are certain disclosures. That is for about 3.5 years, so that can give you some sense. Yeah?
Okay. Got it.
See, you have those capacities and you have the current numbers, revenues.
Got it. I'll try to look from the DRHP. Just one last clarification on the numbers again. Is you have shared the quarterly numbers for the SI business in terms of revenue for the full year and for the quarter. Now, if I just deduct the quarter 4 numbers for last year and for the current year from the full year numbers, basically looking at the 9-month numbers for SI business, the numbers look to be flat. I mean, not flat, but the growth is about 8% versus in fourth quarter the growth is about 39%. So is there something which has come particularly in the fourth quarter is there some one-off here, or how should we think of this? So the point is the 9-month growth in SI business is about 8% versus fourth quarter growth is about 39%. Why this is?
You want me to take that, Harsh?
Sure, Partha. You can start. You start off, then I'll.
Okay. So, Dhruv, the answer is, see, we have had some. We actually got entry into certain accounts towards the end of the third quarter of the financial year. And those businesses started clocking in a way, in the fourth quarter. So when you compare quarter to quarter, this is from where the incremental growth is coming broadly. Okay. Now I leave to Harsh to complete this.
Yeah. Also, a few of our products that were produced in that third quarter got stagnated given Europe's own requirement, and that got shifted and went down to the next quarter. So maybe that's just a shift of a little bit here and there. But principally what Partha said is the primary reason, where our new account openings and our calendar year sort of contracts have kicked in, which is why you're seeing that increase.
Okay. So that's a bit interesting because should we expect a higher growth because the fourth quarter base gives a and the point is a large significant part of growth has come in the fourth quarter, which you suggest is coming from new businesses. So should we expect a strong momentum here for the next year also as this market goes through?
See, it would be a forward-looking statement to comment on this. So, you wait for another 2 months, you will be able to correlate. We'll come out with the Q1 numbers as well. Right?
Okay, sure. Thanks so much.
Thank you, sir. The next question comes from Sachin Kaseria from Swan Investment. Please go ahead.
Yeah, good evening, sir, and congrats for a good set of numbers. My question was regarding YCPL. Are you sharing the number for FY21 for YCPL?
No. They will get consolidated after we complete the acquisition. So, we'll do the consolidation in the H2 of the current financials.
Okay, no, but just since it's a large acquisition for us, can you give us some indication what type of revenue, EBITDA, profit does YCPL enjoy?
It is doing well. Yeah.
Okay. Second question was on the slide number 22, I think, of the presentation, wherein the asset turnover ratio has gone down from 1.8 to 1.2. And in the call, you mentioned that our focus is, more on profitable and higher valued products. So, what could explain the fact that while we are moving into more specialty and valued, the asset turn has gone down from 1.8 to 1.2, sir?
It is basically the denominator is the total of the asset side of the balance sheet. That is how one looks at it. So our balance sheet is heavy because we have substantial cash on the balance sheet. That is point number 1. Point number 2 is capitalization is going on. Okay. Our capex outflow is of the order of about 78-80 crores during the year, and it is going to continue. That is what is actually depressing the asset turn.
If we go to adjust the asset turn for cash on balance sheet in CWIP, will we be looking at a stable number of 1.8 sort of number?
You will see an improving number. on a net block basis, because we have about 45-46 crores of depreciation load.
Sure.
Yeah?
And so just one question on the margin front. Most of the chemical companies which are like you doing more of specialty and value added, over a period of time the margins tend to be in plus of 20-22%. So over a 2-3 year journey, once this integration of ICP happens and this fluorination starts to kick off, are you also on that journey wherein over a period of next 2 to 3 years maybe your margins could be in the range of 20-22% EBITDA margin?
Harsh, would you like to comment on that?
Yeah, sure. So, two comments there. First is our specialty business and fluorine business are indeed in the top quartile of specialty industry profitability. So that is very clear. These businesses have about 400 to 500 crores of capex going on within them, and they would therefore grow. And more capex will come later, and we'll talk about that maybe in the quarters to come. However, on the acetyl side, which remains the cash-generating focus business of ours and does not require a lot of capital, it's an extremely capital-light business model. That is the business where we are not saying that we will degrow. We want to keep up market share. So the balance of the two, you definitely come up with a much higher percentage since the capexes are being driven towards the specialty kind of product ranges and business types.
Okay, thank you.
Thank you, sir. Next question comes from Prasenjit Bhuya from Ambit Capital. Please go ahead.
Thanks, sir, for the opportunity. So my question is on your presentation 8, where you mentioned that you have developed 5 different chemistry platforms. So could you elaborate what kind of chemistry platforms these are and what kind of growth opportunities we are seeing in this chemistry platform?
Yeah, sure, Prasenjit. So these chemistry platforms have actually, just to take a little bit back in time, when we got the acquisition from Clariant, we were just manufacturing 8-9 products. Now we have scaled up to 35 products, 37 products. To get to these and to move up the value chain, we have to add on different chemistries which allow you to make more complex molecules. And some of these are already being commercialized as you're seeing them in the last quarter. Some of them are we are putting up more and more capexes which will be driven in the next financial year. So that is how we're expecting this to grow. And given that your basic chemistry basket has broadened, by definition, your addressable market has increased. Therefore, the possibilities increase. It's more a question of which area of the intermediate space do you want to play in.
Sure. And sir, if I see your major focus is on specialty intermediates, so just to understand how the growth opportunities are coming, so since you already have 55% domestic market share, so are we moving to more new kind of products in specialty intermediates, or the end market is itself growing very fast that we see lot more opportunities in this particular segment? Can you throw some more light on specialty intermediate growth opportunities?
Sure. So two basic trends. Of course, the local market is available there for us to take, Prasenjit. And international market as well, you're seeing the China plus one approach. So given that there are not many players of this chemistry range and this chemistry value chain, or as integrated value chain as Laxmi, many companies are now, or many customers want to buy and secure themselves by partnering with us, which is what's driving growth in both of these. And new molecule development or new product development is a parallel activity irrespective of these two previous points.
Sure. Thanks a lot, sir.
Thank you, sir. So next question comes from Ram Moti from Prabhudas Lilladher. Please go ahead.
Hello, can you hear me, sir?
Yes.
Hello?
Yes, hear me? Very audible.
Sir, I just wanted to know what would be a total outlay for this fluoro specialty chemicals business currently?
So 250 to 270 crores is where we're expecting the fluoro business capex to be at.
252, and this would, as you guided, it will get commissioned by last quarter of this financial year.
That's right.
And just lastly, sir, would the fluoro specialty chemical CEO asset turnover would be similar to a company's asset turnover, or it will be better or lower?
So the fluoro business
At the peak.
turnover, at peak turnover would be between 1.3 to 1.1 in that range.
1.1 to 1.3. But margins will be far more better. Hello?
Yes, indeed.
Okay. And just last question from my side. What would be the capex for this year, sir, for FY22 for us, overall, for the full company?
Could I take that, Ash?
Yeah, Parthu.
It should be of the order of about 300 crores.
Okay. And lastly, sir, will this capex intensity continue in the same pace as you said that, our growth in both SI as well as specialty fluoro is based on, how much we invest into assets. So will we continue to maintain the pace, or it will be a step-up approach kind of thing?
Yes, it is going to be a step-up approach. Yeah?
Okay. Thanks a lot for answering my question.
Thank you.
Thank you, sir. Next question is from Bala Murali Krishna, an individual investor. Please go ahead.
Yeah. I have one query in this P&L. The employee benefit expense was quite high this quarter. Could you please elaborate on that one?
Yeah, the employee benefit expense is higher because it has taken the ESOP cost, which has been given to the leadership team and some of the other important members of our managerial staff. The second point is, given the strong results, the incentives or year-end variable pay for the entire company has been at a substantially higher level than the last year. They have all been booked in this quarter. So a better way to look at this expenditure line item is to see the year-on-year figures, number one. And number two, going forward, we shall try and equalize this number quarter over quarter in the coming years.
Yeah, thank you. That's it.
Thank you.
Thank you, sir. Next question comes from Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah. Good evening, sir, and congratulations on good number. Sir, there is a trading purchase and sales also in that. So, excluding that, what could be the margin, or how is the margin in trading business?
The trading business has trading margins. So on an average, if you take about, say, 3% or so, on that trading purchase, you will arrive at the trading turnover.
Okay, so the core business could have higher margin.
Yes.
What is it? Okay. Thanks, sir. Great. Thank you very much. That was the question.
Thank you, sir. The next question comes from Mithul Patel from India Infoline Asset Management. Please go ahead.
Yeah, thank you. Thank you for taking my question. So regarding the employee costs and the stock options, etc. So it's 35 crores on a consolidated basis this quarter. So if you can quantify this in terms of how much of the ESOP, so we can sort of do our adjustments, which perhaps won't be recurring every quarter going forward. Or is this the run rate that we should assume for the full year with some inflation? Can you shed some light on that, please? Thank you.
Yeah. So the ESOP cost, Mitul, is going to continue over the vesting period. And the vesting period is until 2024, March. Okay? So quarter on quarter, the ESOP cost will get adjusted. Okay? And depending on the performance of the company and strengthening of the management teams, strengthening of the workforce, it will actually experience some escalation. If you look at our employment cost, it is very low compared to any other specialty company. So this is an element or a line item which may continue to grow in future, slightly ahead of the growth in the overall fixed costs. Yeah?
Sure. Thank you.
Thank you, sir. The next question comes from Yash Raj, an individual investor. Please go ahead.
Good evening, sir, and congratulations on strong numbers. I also appreciate that the company is progressing, looking at margin-accretive products going forward. I would appreciate if you could please share the capacity utilization levels and its trajectory spread across, the plants of Greater Palshuram, which is going to come in future, like over a 2-year period, utilization levels, if you can project that. And the existing plant, 84%, it is more or less stagnant for the last 2-3 years in the 80-84% range. So just from a investor call in Jubilant Ingrevia, one of our competitors, it has been highlighted that they have entered diketene derivatives. So any impact? These are the 2 questions I have. Thanks.
Harsh, you may take them.
Sure. So, Yash, as mentioned, the capacity utilization was clearly a bit impacted last year in the acetides because of the lockdowns that were there. But we clearly have more capacity coming on stream with the acquisition of YCPL. With regard to the specialty, as mentioned before, it's primarily we don't look at capacity utilization, we look at really product mix optimization to drive our strategy. On the third part of your question on Jubilant Ingrevia, irrespective of competition coming into the market, our strategy remains the same. We are very, very clear on our position as value chain leaders, as product mix leaders in the diketene space. Our various kinds of businesses within this bucket enable us to continue to remain leaders as such. That's all I would like to comment for now.
Thank you. We look forward to maybe a 20% appreciation in terms of revenue going forward, and maybe stabilization of 16% margins on a reasonable level. Thank you. Take care.
Thank you, sir. The next question comes from Devesh Kayal from Aiden Capital. Please go ahead.
Yeah, hi, sir. So I have 2 housekeeping questions. First is, what was the power and fuel cost for FY21?
Oh my God. We will have to check that, but my total utility bill should be of the order of about 70-80 crores for the full year.
Okay. Because last year we had 98 crores as a power.
Then it will be higher because of the capacity utilization.
Okay. And second is on the tax rate. So we have been having 20% tax rate over past 2 years. So what's the rate we are looking for on the tax rate, on the tax side going forward for the next 2 years?
Very similar. Maybe it can go up by maybe 1% each of the years. Yeah.
Okay. That's it from me, sir. Thank you.
Thank you, sir. Next, we have a follow-up question from Rohit Nagaraj from Sunidhi Securities. Thank you. Please go ahead, sir.
Yeah, thanks for the follow-up, sir. Sir, so we have mentioned that we have two R&D sites, one in India and Italy. So is it predominantly to be nearer to the customer, or probably just now we'll be starting with the new commissioning of the plant, and then probably it will take time to stabilize. Once it is stabilized, probably we'll move back the Italy R&D to India. So what is your thought process on this?
Sure. Yeah. So Rohit, as you know, getting R&D to a full profitable scale takes its time. So we are actually looking at a delinking between what goes on in India manufacturing and R&D startup in Italy. So R&D startup would actually happen maybe 3 to 6 months before the plant is fully operational in India. And our Italian colleagues will continue working on what they were when they left. Of course, refreshing and updating themselves with respect to market. But with that caveat aside, we are eagerly looking to start up our Italian R&D zone.
Understood, sir. So, and just one clarification. So, Partha sir mentioned that this year CapEx will be about 300 crores. So, this is excluding the investment in Vitti, which you have mentioned about 100 crores, right?
No, it is including.
Okay, so already we have done 100 crores investment in Vitti, and incrementally 200 crores will be spent during this year as an overall CapEx. Is that right?
Yes.
Okay. Thank you so much, sir.
Thank you.
Thank you, sir. That will be the last question for the day. I would now like to hand over the conference to the management for closing comments.
Thank you, everybody. It has been a pleasure to be here with you today and answer to your questions to the best of our abilities. I do hope that we will continue to grow our businesses, and definitely it will be our endeavor to ensure that your expectations of us are fully met. Thank you again for your patience and for your very insightful questions.
Thank you, sir. Thank you, everyone.
Thank you very much.
Thank you, sir.
Thank you, sir. Thanks. Thank you, sir.
Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may disconnect your lines now. Thank you, and have a pleasant evening.
Thank you.
Your conference is no longer being recorded.